Hi, my name is Ellen Cadorna, and this is my presentation on the One Big Beautiful Bill Act of 2025, also known as the OBBBA. So I'll give you a brief legislative background of the OBBBA. So the bill was a continuation of the federal tax policy evolution following the Tax Cuts and Jobs Act, whose major provisions are expiring on May 2025. So it was introduced first as HR 1 on May 2025. So when the Senate voted on July 1st, it was 50-50. So Vice President J.D. Vance voted to break the tie. So eventually it went to the House where they agreed on the Senate version on July 3rd. And it was a 218 versus 214 vote in favor of the OBBA. And then finally, on 119th US Congress, the Big One Beautiful Bill Act or OBBA was signed into law by President Donald J. Trump on 4th of July 2025. Now, there's more information or details about this on the article published by Alitier and Nevius. It's called Tax Provisions on One Big Beautiful Bill Act, and Alitier published it on the Journal of Accountancy website. So these are the highlights that I'm going to talk about this presentation is the standard deduction, the child and family credits, the above the line deductions, and of course the senior credits. So I just did an example of the comparison between the 2024 and the 2025 tax year. So 2024 definitely is under the CJA, and the 2025 it's OBBBA. Now, if you would see, as you can see, single and married filing separately, from 14,600 it went up to 15,750. Now, for married filing jointly, it was from 29,000 to 200 to 31,500. Now, head of the household from 21,900 to 23,625. Now, the challenge as a tax preparer is that there are some tax payers that they don't know what is their tax status at the end of the year. So it's a kind of like challenge explaining it to them. Then I would ask questions of their personal situation, and then we were going to come about what is the best status for them or what is their actual status. So at least in that way, if they get audited within the 3 years at the time that they file their taxes, so we can justify and then explain why we chose that status. So I'm very much in favor of the increasing the standard deduction, because increasing the deduction, it means that their taxable income will go down, and then eventually there will be most likely or higher chances that we'll get refund. So this information is available in the government website, which is the IRS website, and it's under the publication 501. Next is child and family credit. So as you can see, with the TCJA, the child tax credit is only $2,000. Now with OBBA, it went to $2,200. So to claim the child tax credit, there's still some requirements or tests that needs to be done. So first, the relationship test, whether they direct children, siblings, or descendants. And then the most important is that to claim a child tax credit, their child should be, or dependent child, should be under 17 years of age. And then aside from that is the residence test. So their child should be living with them for the full 12 months. The only exemption is that if they're away from home. And then as for school, for example, or they're away from college. And then the income test. So making sure that they are not making any income, because there's some children that if they're 15 or 16, they're working already. So as long as they're not supporting themselves more than 50% of what should have been, then they would still be able to claim the child tax credits. Now, the thing is that with the income phase out, it's the same thing. It didn't change. So, for example, single 200,000, married filing separately 200,000, married filing jointly 400,000. Same thing with the phase out rate. If they go over the income phase out, so there will be $50 per $1,000 over limit. So it's the same thing with OBBA. The challenge for me as a tax payer is because most taxpayers, they're not aware of the income threshold. So they would think that because they have a dependent or child, that they can claim child tax credit. Even if they go over the income threshold, they think that they would take full credit, which is $2,200. So I would educate my client that these are the income threshold. So at least in the next tax season, they would know what to do, and then they would know what to expect. So this information, I got it from from the textbook. So McGraw-Hill's Taxation of Individuals and Business Entities, which is the 2026 revision. Now, for the above the line deductions, there are like two things that I'm very much interested to talk about. One is the income from tips, and the other one is the overtime pay. So, for the income from tips, so historically, tips have been taxed in the same manner as wages or other compensation. So, it's 100% fully taxable. And then, what they would do is employees must report cash tips to their employer. The employer would put it on W-2, or they can do a self-report. Now, with the OBBBA, the good thing is that there is no tax on tips, but there's some restrictions. So, for example, they could only there is a limit of 25,000, so they cannot go over tips, which is 25,000, and then they still need to pay the social security. So the no tax on tips is just on the federal income level only, but they still need to pay the social security and Medicare, and then as well, it's before in the old law, everyone is eligible, but now in OBBA, only customary tip jobs like servers, stylists, and then in the past there's no income threshold, but right now it starts to go away. For a single, it's $150,000. For joint filers, it's $300,000, and then before, even if they're married filing separately, they would be allowed to claim it, but now they're disqualified from the tip deduction if they filed separately. So I am very much in favor of this no tax on tips, is because so they can add into their income without additional burden of taxable dues. So for example, they're making 30,000, and then people don't tend to report their tips because they don't want to be taxed. However, with this provision, the good thing is that if they added 30,000 plus 15,000, for example, for tips, their income will go up. It would help them with buying a house, buying a car, or securing personal loan. So at least in that way, it would help the economy as well. The only challenge for a tax preparer is that they don't know, and especially since this is just like last year, it's new. They don't know most of the time how much is the tip, and then at times it's not reported on W2. So we need to figure out what is the amount that they would like to declare, or and then also there's like they need to meet the rules on the tips. So for example, it must be voluntary. So for when you go to a restaurant, and then for example there are 5 people, right? There's like some establishment that adds your gratuities or tips on the bill. So those are not qualified for no tax on tips. And then it's only when cash tips that they declare, and then the customer must choose the amount. And another thing is that it must be reported either on W-2 by themselves, or they, I mean, on W-2. So what happens is that they would report to their employer their tips, and then the employer will put it on W-2. Or if it's a self-reported income, then they need to report them in the form 4137. And then again, it only applies to the federal income tax. So they still need to pay Social Security and Medicare taxes. The only thing that I'm not in favor of this is that it's only temporary. So from 2025 to 2028. Now, I was able to find some information, and this is a good read as well. So the CPA Journal website, it's called A First Look at No Tax on Tips. So that's an interesting read. And now, for the overtime. So in the past, it's fully taxable, but now in OBBA, it's no tax on overtime. So the non-itemizer, they can claim it, because before they need to determine whether they're going to itemize or do standard deduction. Now, whichever, they are eligible to not tax on overtime. However, they cannot claim it if they're filing separately as well, so it has to be joint. And then like on the tips, it would be applicable on the federal income tax only, because they still have to pay on the Social Security and Medicare tax. And there's a limit on the overtime. So for single, it's 12,500, and then for couples filing jointly, it's 25,000 per year. So, and then for the income threshold as well, for the maximum tips rather, sorry. So they can only claim up to $12,500 of tip, overtime rather, if it's single, and then 25,000 if it's couples filing jointly. So there is a phasing out or income threshold for if their MAGI, the modified adjusted gross income, should not be over 275,000. So it phased out gradually if the income is between 150,000 up to 275,000. So the only challenge is that it is not on, so most of the employers, they don't put it separately on W-2. So that's a challenge about preparing the tax. Although I'm very much in favor of the no tax on overtime. So the challenge is that they don't know which one, and it's hard for them to figure out which one is overtime and which one is regular time. Another challenge is that they thought that it's 100%. So for example, if they're making $20 an hour, they go into overtime, so their time and a half is $30. So they thought that all taxpayers, well, some of the taxpayers that I helped, they thought that it's $30 that's considered overtime, but I would explain that it's just the half part. So there's regular tax on the $20 per hour. Now the time and a half of the half, which is the $10, is the only exception on the overtime. So, and then the next one. So by the way, on the no tax on tip is like no tax on the senior credit, sorry. So senior credit, these are the provisions. So between TCJA and OBBA. So the senior bonus deduction, in the past there is none, but in OBBA it's 6,000 per person. So for married couple, at least, or they would be up to $12,000 if they $6,000. Now for itemization, before, it's not applicable. They cannot, they did not, so if it's itemization, bonus are not available. But then in OBBA, it is available that even if they itemize, so they don't have to do um, standard deduction if they have more deduction on the standard deduction, right? So, if it's married filing separately, they in the old law they cannot do. But then same thing, same thing with OBBA. So married filing separately, they cannot. They're disqualified from the 6,000 bonus. Now the term or duration. So some of the term in TCJ it's done, it's expired. However, in OBBA, one was permanent, and then others like temporary measures. So for example, for the 6,000, it's there already. But then for the 6,000 dollars, it's temporary. Now additional deduction as well. In the old law, it's 1950 for single head of household, and then 15,500, 1,550 for married filing jointly. It went up to 1,600 per person. Now, another thing for additional deduction is the blind and disability. Before, they could only claim certain amount, but now, for example, if two couples, so which is unfortunate if they're both blind, each one can claim 1,600, and then if they're disabled, each person can claim 1,600 as well. So there's an income phase out. Before, there's no income phase out threshold, but now in OBBA, 75,000 for single, and then 150,000 for married filing jointly. This is the part that I'm not in favor of. So I wish, because senior, most of them, most likely they're living off of their pension. So I wish that they won't be any income phase out, although it's less likely that they would go over. But then I wish that they would make it, there's no income phase out anymore. And then also the challenge is that, another thing, as a tax preparer, it's a challenge educating people that there's an income threshold and there's a limitation as well. It's not going to be unlike in the past that they cannot go over the income now. So the source is that the IRS publication 554, which is the tax guide for seniors. So, and these are my references. Well, thank you for your time and have a great night.